morning, everybody. Appreciate y'all joining us today. Gloomy Friday here in DFW, but we got some great product presentations we're going to talk about right now with American Amicable. This is being recorded, so if you know anybody that's missing this, tell them to check the GAF YouTube page here probably next week at some point, and this will be uploaded. This will not be a long presentation. This term product, the SafeCare Term with American Amicable, is actually very straightforward, and it's going to be very easy to explain and understand. But the best part about it is that it's one of the few products and carriers out there that's offering return of premium. We don't see that very much anymore. Most people are getting rid of it because people aren't using it. But every once in a while, you get somebody that asks about it, and this could be an option. And so, as we go through this, if you have questions, please throw it in the Q&A section. But let's get started. All right, so this is a rapid issue term from American Amicable with an optional ROP rider. You don't have to have the ROP. You can add it, and there will be a slight cost to it. Another great thing about it, it does have living benefits, okay? A lot of term with ROP usually doesn't come with living benefits. So the fact that you get living benefits and you have the option to add the ROP, huge benefit. We've got 10, 15, 20, 30-year durations. The ROP is only available on the 20 and 30. Okay, so if they want a 10 or 15, there is no ROP option. You can convert it to any product, any permanent product that American Amicable has. There are preferred rates available, and the issue age is up to 75. So talking about those issue ages, it really depends, obviously, on the number of years you're looking at. So it can go up to 75 for a 10-year term, but as the term duration goes higher, just like every other carrier, that age will drop. And then you'll notice with the ROP 20 and 30 year, it also drops another 5 years. The minimum face amount is $25K. So anybody looking for a very small term can go here. And not many carriers go under that 100K threshold, but the max face is $500,000. So if somebody looking for $1 million won't be able to do it. You might be able to do 2 $500,000 policies, but you won't be able to have one. Minimum premium $25 per month. The living benefits that are included are terminal illness, confined care, and chronic illness. So terminal illness, doctor says you have 24 months or less to live. That's in the state of Texas. There are some states that are only 12 months. You get the death benefit for that terminal illness, or you can receive up to the 100% death benefit. More than likely, you won't receive the full death benefit, but you have that option. Confined care, confined to a nursing home for at least 30 days after the policy has been written. You can receive a monthly benefit. That benefit is up to 5% of the face value, up to $5,000, okay? And then chronic illness, you become permanently unable to perform for at least a period of 90 days. You can't do 2 of the 6 activities for at least 90 days, or substantial supervision for at least 90 consecutive days, like a cognitive impairment. You have the chronic illness rider to help take care of you. Now, there is a critical illness rider on this product. The only thing with that critical illness rider is it costs. It also has limitations on how much death benefit you can have. I think you can get up to 100% CIR, which is chronic illness rider, but the death benefit max is $100,000. I'll show you in the illustration how you look at that, okay? All right, so RP provides a cash value payable at the end of the level period, only available on the 20 and 30-year plans. It can return up to 75% of the base policy premium. So it's not everything, but it's still something. And you'll notice in an illustration, after the first couple of years, you'll see a cash value ROP. Now, it's not cash value as far as like IUL or whole life. The cash value is strictly based on the ROP, okay, the return of premium. When we talk about underwriting, this is simplified issue. So you're not going to have a medical, you're not going to need to do blood work. I mean, obviously, many carriers are moving and are already in that simplified issue space. But this does go down to table 4. So there are substandard rates for those a little less healthier. And I already mentioned it does go up to preferred. Okay. Some of the eligibility, what is looked at is the MVR, MIB, script check. They have a very liberal height and weight chart, very simplified application. If you're familiar with American Amicable Senior Choice application, it's going to be very similar to that. Questions are going to be a little different because obviously we're not dealing only with seniors when we talk about the SafeCare term, but it's going to be very simplified, much different than other traditional term carriers. And there might be a telephone interview, which is very common amongst American Amicable products. Now, I'm going to show you what questions are needed to be looked at if you want preferred rates, okay? And so you've got to do a little bit of field underwriting, okay? Obviously, we necessarily aren't underwriters, but you have to at least be able to look at these questions, ask these to the client, and if any of these are no, or I'm sorry, if any of these are yes, then you can't get preferred rates. Doesn't mean you're denied. It just means you have to be able to answer all of these no in order to get preferred rates. And so before you even give preferred pricing, or if you're talking to somebody, you give them some pricing and say, hey, we might be able to get preferred rates, but I need to ask you a few questions to see if you qualify. And then you could go through these. Let's see, I think it's 9 questions. All right. So like tobacco or nicotine lasts 36 months. You got to make sure you follow the preferred height and weight chart of their build chart, okay? A lot of the other questions are 10 years, anything to take, any medication to treat high blood pressure or cholesterol. The last one in past 5 years, convicted of a felony or a misdemeanor. Okay, so if you can go through these with the client and they can answer all of them no, then they might be able to get that preferred rating, okay? And I believe that's about it. Like I said, there's not a lot of moving pieces. It's term, okay? We're looking for cheap. The biggest difference with this is that we have the ability to get return of premium. So what I'm going to do is I'm going to back out. I'm going to go to the American Amicable website so that way we can look at illustrating this. This is their site. We haven't changed it in years, but all you got to do is go to illustrations, and you just want to scroll down until you find SafeCare term. And we find it right here. So I'm going to click that. And it looks very similar, just like any other American Amicable illustration. Now, you put in the data that you need, all right? They do go with actual age. So if you want to put just the age, you can do that. So I'm just going to go in here, test client. I'm going to put a date of birth. So let's just go May 1st. Let's just do 1980. Why not? 1980. Let's go female. Have you used tobacco within the last 12 or 36 months? I'll put no for both of those. Notice here's where you put preferred. So if you go through that field underwriting checklist and they answer all of them no, you can click preferred to get preferred pricing. I'm going to leave it for now. All right. I'm just going to say they answered one of those yes. And so I'll just leave it. We are in the state of Texas. Okay, and then we go through our coverages. You got all the different term lengths here, and then on this side, we've got the ROP. Let's say the client does want ROP. So we'll do a 20-year ROP, all right? And sorry, my screen literally, there we go. All right, it just came back. My screen went blank. All right, we're gonna go monthly. And just like I'm going to go senior choice just because that is one of their most popular products, especially in the final expense space. You can put different death benefit options to give multiple quotes. Okay, so you can go here and say, you know what? They want to look at 100,000, they want to look at 200,000, and they want to look at 300,000. So I can put all those in, and when I click continue down here, it will give me all 3 of those. We also have our riders here at the bottom: waiver premium, child term, or child agreement, spouse term, accidental death. You can see here is the critical illness one. I will show you that here in a second. Okay. I'm going to not add any riders, but these riders will add a little bit of premium to the monthly premium. Okay. So we've got all of our data. We click continue. If it ever pops back out red, that means something's missing or something's wrong. Something is not, it can't calculate it because we've inputted too much death benefit or not enough premium, or I'll show you the critical illness, how it works. So we open up our PDF. I'll blow this up a little bit so everybody can see. And so we have our 20-year term, $100,000, and here's the premium, $113.22. And you can scroll down and see all the premiums for those 20 years. All right. And then the cash value. Remember, the cash value is not necessarily actual cash value. It's the ROP, cash that can be returned. All right. It does show you the 20 and 30-year options for the ROP as far as, okay, well, if I don't want to do the 20-year, I want to do the 30-year, I can. Well, notice what happens when you do 30-year. It actually, premium goes down. And it's because of how they do their banding. All right, so this is a great way to upsell without actually upselling premium. I can get my client more cover. I can get my client coverage for longer without actually hurting their checkbook. Okay, so just keep that in mind that usually the 30-year is going to be a cheaper option. All right, so that was the 100K. You keep scrolling down, you get the 200K. Everything looks the exact same. Notice the premium right here. The 30-year and the 20-year. But if they want the 20-year, $220. And then we scroll down again, and we have the 300K, excuse me, $299.52, and it shows everything once again. All right, so very straightforward, very easy to explain. Here's your premium. Here is if you want to cash it out and get some of your premiums back, here's where you do it. All right. Now, I told you if there's something wrong, like if I put 600K and this product doesn't go up to 600K and I click continue, notice there's a red and it's going to tell me maximum base is $500,000. Okay, so anytime you have an error in there, it will tell you what that error is. What I want to show you on the critical illness is the way the percentages work out. So depending on how much critical illness percentage you want paid out, will determine how much death benefit you can get. So if I do 25, let's see, it should pop up. Notice it populated because I can get up to, I want to say it's 150 or 200. Let me see. If I click 300, oh, 300 also worked. All right. Well, let me just change it to 100 because I know that's 100. There it is. So it says maximum base insurance coverage is $100,000 with 100% critical illness rider coverage. All right. So if you want to add that critical illness rider for additional protection, you can do that, but you have to make sure your death benefit limits are within range. Look at that. The 50% is 200K. And let me do 500K and do 25. Let's see if that's, and there you go. 400K is the max with the critical illness rider. It has the other ones. Remember, it has terminal illness, it has confined care, and it has chronic illness. All right. So if you're satisfied with those, keep those, go with those. Don't worry about the rest, or at least don't worry about the critical illness. But the critical illness is additional coverage like heart attack, stroke, things like that. All right.